You look at your statement. Like I could go on today and say, "Oh, I own $1,000 of Johnson & Johnson." Well, that's only assuming I could sell all of it right now at that price, and I can probably today. But on a day when the market's panicking, and oh, by the way, Schwab's down again, and the other trading websites are mysteriously down again, and you're unable to sell. Maybe your next bid is 20% down. And I mean, if you were counting on this $1,000 and suddenly it's 800 or it's 500, that's not good. and the other thing is the theme is the Fed's got our back. In other words, Fed would never allow. I've heard people say we will never, smart people, and I'm not sure I necessarily disagree, but the Fed will never allow a 2008 type drop again. Well, there's twice in the last 25 years we've had a 50% index, S&P 500 drop. We had it in 2001 to 2003, and we had it in 0809. And the Fed had our back then, too. You can find quotes from back then that says the Fed's got our back. So the Fed is not omnipotent.
And you bring up the baby boomers, retiring 10,000 a day. They still have an incredibly high allocation to the stock market in general. Highest ever, right?
Yeah.
And the market's at its all-time highs. They've not recalibrated their portfolios after the last few years of explosive growth. So really, they have a lot of risk in their portfolios. And if they collectively experience a reverse wealth effect because of a stock market decline, that's even more pronounced for them due to their allocations. What do you think we could expect to see happen there in the economy if that were to take place?
Well, that's going back to is the Fed just going to ride to the rescue? I don't think that the stock market is their number one priority, but it's probably their number two after making the Treasury look solvent. I don't know. There's a Melody Wright was saying when she was looking. She's a great person on Twitter. She mostly real estate, but she also was looking at clients' accounts. I don't know if it was for her job somehow. She's looking through people's finances, and she said, I think it was her that said the number of Tesla-only accounts, like someone has $500,000 in an IRA and it's all in Tesla. You know what I mean? It was shocking to her. And so that's just one extreme example, but I'm sure there's a lot of people that have 100% in an SPX fund, which really you're buying like 5 stocks, when you do that. And if that all plummets, everyone's, you're going to have this, everyone's going to feel a little poorer. I mean, Rick Roll has a great quote. It says, I know that my assets are ephemeral, but my debts are money good. I love that quote because you look at your statement. Like I could go on today and say, "Oh, I own $1,000 of Johnson & Johnson." Well, that's only assuming I could sell all of it right now at that price, and I can probably today. But on a day when the market's panicking, and oh, by the way, Schwab's down again, and the other trading websites are mysteriously down again, and you're unable to sell. Maybe your next bid is 20% down. And I mean, if you were counting on this $1,000 and suddenly it's 800 or it's 500, that's not good. and the other thing is the theme is the Fed's got our back. In other words, Fed would never allow. I've heard people say we will never, smart people, and I'm not sure I necessarily disagree, but the Fed will never allow a 2008 type drop again. Well, there's twice in the last 25 years we've had a 50% index, S&P 500 drop. We had it in 2001 to 2003, and we had it in 0809. And the Fed had our back then, too. You can find quotes from back then that says the Fed's got our back. So the Fed is not omnipotent. Their primary job is going to be to save, first of all, their future careers and the Treasury. So I don't know what's going to happen. I worry about it. There's a guy like Ted Oakley who says, he does a lot of retirement for accounts. He's also looking at people's accounts, what they have in their investments, because he's trying to advise them. And he says so many people, they're 70, even 80 years old, and they're like 100% in stocks. And he's like, that's kind of crazy. You got to start taking some off the table because you never know. You could have a 50% drop coming in. And, the NASDAQ in 01, 03 went down like 80%. And many stocks just went away. which is
Yeah, I
disappeared.
mean, Amazon dropped something like 94%, and I think even Microsoft dropped something like 80% or
Correct.
83% during that time.
Correct, which is why the only people who owned Amazon back in the 90s and still own it today have been in a coma for 30 years. Because there's no way normal people are gonna. Amazon had more than one, I think, 90% drop. I was just looking the other day. Nvidia had a 90% drop back around '01. If you look at the long-term charts, most charts nowadays are like, here's the last 3 months of history, and I just roll my eyes.
So, Rudy, in the Dow charts, you can literally draw a line, a resistance line, from the top of the 1929 bubble peak all the way to the top of the dot-com bubble peak, to the top in 2022, and now once again today. In fact, the Dow Jones is currently above this 125-year resistance trend line. The last time it happened was 1929 when it crossed that threshold. Do you expect the Dow to keep rising without any mean reversion taking place? Is this time different?
Is this time different? That's famous last words. Well, I will say that central banks are more insane than any period in history. I mean, I think that even the founders of the Fed, who were not good people, in my opinion, I think they'd be appalled by what the Federal Reserve has done, especially post Greenspan or since Greenspan came into power. Could we have another 1929? Of course, if you say that, you just automatically, 99% of people just tune you out. You cannot.
I don't know that a mean reversion means a 1929 event,
well,
but I mean, I'm certainly not discounting it.
Okay, correct. I mean, well, I'm just, talk to Dave Collum and see what he thinks the stock market's going to do. It's pretty funny. I've always been, I always say I'm bearish in theory, but not in practice. I mean, I've been long stocks for years, and I always have to tell people, because well, you're criticizing the Federal Reserve, but you must be short stocks. No, I'm criticizing the Federal Reserve. The Federal Reserve insane policy has been pretty good for me. You know what I mean? But I'm not a psychopath. I care about my family. I care about friends, and there's, that are not benefiting from this. And it's not good in America to have this continual Cantillon effect of, which ends up with, a group of fairly well-off people, and then a group of obscenely well-off people, and then some are just kind of struggling in between, and then you've got just the dirt poor. But the dirt poor have sort of a safety net. You can go, I hear these things where, a lot of people, they maybe they make, 50 grand a year or 40 grand a year. And of course they're struggling as much as anybody, but they don't qualify for any government aid because they make too much, so, and I tell people, even if you're, a millionaire and you're making, $1 million a year, you're far closer to the homeless person than you are to David Tepper or, Ray Dalio or anybody like that. Those guys are billion. They're in a whole different universe. And I think that's who primarily the Fed is owned by, and also who they're working for. I joke that, Occupy Wall Street turned out to have been about future and ex-FOMC members. I mean, just look at where they all go. They go to BlackRock, they go to PIMCO, they all go to PIMCO, Kashkari and Bernanke and Greenspan. They go to BlackRock, Citadel, that was the one. Yeah, Citadel. So it's a joke, and the thing is, I shouldn't be, and there's a handful of other people. A congressman should be bringing this up. A senator should be bringing this up. I always, for years, will CC the House Finance Committee and the Senate Banking Committee on all this garbage that these guys are pulling, and I've never once had a response. Not that I expect one, but Congress is really where the problem is. And as long as we keep electing the same clowns, we're going to get the same result.
So, Rudy, since gold broke out in March of this year, the dollar, it's been strong, and lately it's been rising. And normally in that type of environment, gold is weaker. Why hasn't a strong and rising U.S. dollar stopped gold from rising from 2,000 at the beginning of the year to now around 2,700?
I think we're seeing a fact that, Brent Johnson and his dollar milkshake theory, that the dollar, do you want to own the dollar, or do you want to own the euro, or do you want to own the British pound? Of course you're going to want to own the dollar. It's liquid. That's where people are going who need to move, $10 billion, or, whether it's rich people or funds or countries, they're going to go to the dollar. So I think the dollar versus the yen and the euro and the Swiss franc, Wow, Swiss franc always kind of different, but I think it's the dollar will hold up against them, and so a lot of people will say, "See, everything's okay. The dollar's holding up." But against real things, just look at that chart of consumer purchasing power. The dollar is losing power every day. It's not that gold's going up; it's that the value of the dollar is going down. Is another way to look at it. And gold, gold for me is not it's money. It's not an investment. It's money. I call it gold is a handgun you keep in a drawer and hope you never need. And I think we've clearly seen all the central banks in the world, well, many of the central banks in the world, especially the non-Western ones, are buying gold, I think, at record levels. Why is that? Bernanke said, gold's not money. It's tradition. That's why we hold gold. And, that's why we hold gold instead of diamonds, according to Bernanke, is because of tradition, he told Ron Paul. Gold has been money for centuries, and it will continue to be, and it's proven through history that you can survive. Maybe if you have a little gold. One of the first things the Germans did in World War II is they did a patriotic campaign to get people to hand in their gold. Because the Reichsbank needed it to fund the war. Well, actually, that's another thing. They never paid a penny for the war. They borrowed because Germany figured once they won World War I, they would just collect it from the French and the British or Russians or whatever. And of course, then they ended up losing. And that's a whole nother thing that led to helped lead to the hyperinflation. So, hey, it's a good thing nowadays countries don't go to war on the credit card. We raise taxes, right, to pay for our wars. No, we don't. We're nothing different than we're acting nothing different than Weimar Germany in many ways. Now, the dollar being the reserve currency has what's kept these plates spinning the whole time. And I frankly don't see that changing. I don't see everyone going, you know what, we're going to switch off the dollar tomorrow and go to the yuan. But as a progressive thing in the coming years and decades, I think it's absolutely. I mean, it was so stupid of us to non-judicially just seize all Russian assets. Oh, Gary, you were born in Russia, you have a yacht, we're going to seize it. Now that's fine if they can prove that you're some sort of criminal, but they're doing this non-extraditionally, or not non-judicially. And so if you're, as many people have pointed out, if you're a Chinese guy or you're a Saudi or a UAE or any country with a ton of money that might, if you're Iranian, if you're Venezuelan or whatever, you don't want to have any money in the U.S. because it could be snapped on Janet Yellen's whim. So that was an incredibly stupid thing they did, breaking the rule of law, which they did it in 08, 09. They did it in 2020. There's no police. There's no cops on the beat when it comes to the Fed or to the financial system. Look at just to go off real since I'm on it, TD Bank got fined $3 billion for years of money laundering from drug cartels. Not a single person, to my knowledge, at the company was criminally charged with anything. And that happens time and time again. J.P. Morgan was up to their eyeballs with not only Bernie Madoff, but with Jeff Epstein. Bank of America, I think, has the most fines of anybody over all these years. Why are they still in business? Anyway, I'm not in charge yet.
Not yet, anyway. So there's a similarity in how gold and silver trade at the same time period, and also how they trade at similar milestones, despite the fact that these milestones are sometimes reached at different times. This can cause silver or gold to be the leading indicator depending on the particular milestone. However, for the most part, gold's been the leading indicator. Gold is in a sweet spot since its major breakout in March. In your estimation, is a major silver breakout inevitable?
Yeah, I consider gold to be different than silver. I mean, of course, gold is money. Silver has been used as money until the 1960s in the United States. But I don't view them the same. Silver, of course, is more bang for the buck, more speculative. I'm looking at a chart here. It goes back to 2000 of the silver versus gold, and it's near pretty much about as low as it gets. It got lower in 2020, the ratio. But gold's on a tear, and I think it's for the reasons that people are realizing that the United States is not a serious nation when it comes to finance. And that's been obvious for decades, but I think it's finally the chickens are coming home to roost. And silver, I don't follow silver. I know there's a whole genre that a whole group that follows silver. But for me, silver, I own some of that too, but it's mostly a small amount, and I've traded silver stocks over the years, but only as a trade. Not, you date them, you don't marry them.
I understand. So, Rudy, gold stocks, speaking of stocks, now make up about only 0.5% of the S&P 500. It's a figure that's reminiscent of the market bottoms in 2002 and 2015 rather than any previous speculative top. By April 2024, gold stocks were as cheap as they have ever been. The only comparable period is the market bottom in 2015. However, unlike 2015, gold's now at an all-time high. Back then, a value investor had to anticipate that the gold price was going to rise just to justify an investment in gold equities. That's just not the case today. And additionally, in 2015, the industry's profit margins were very slim. They were about 12%. Today, they're nearly 40%. From an operational standpoint, the margin of safety is much greater now than it was in the past. Do you see this situation as today's gold equities offering an unprecedented combination of low valuation and high potential return?
Well, yeah, but it gets back to the point of valuations don't matter anymore. It's irrelevant because everybody wants to be in tech or AI, or they want to be in the S&P 500. And while there are people, very smart people, who've been saying for a while how cheap. I mean, gold has been cheap relative to the SPX probably since, for 10 years now, almost. So it really hasn't moved, even though the gold price has moved. The GDX, for example, against gold is pretty much, along a flat line since, going back to 2014, after coming down quite a bit. But it could be, so until there's a paradigm shift, which could be, you were asking all these people that are 100% in non-gold stocks, in their IRAs or whatever, what would, if they started selling, what would they move into? Now, of course, in a panic, they'd probably move into cash, and gold would probably be sold off. But if inflation's rising, or it looks like the Fed's kind of losing control of the situation, or rate spike maybe or something, they could be saying, you know what, why don't I put a little bit in gold? And if everybody put 1% of their portfolio into gold, I think gold or into the gold stocks, the gold stocks would go to the moon. Now a lot of people will probably just buy GLD, which I really think has put a damper on the gold stocks because people will just buy GLD, ever since that was introduced. But as I point out, GLD is kind of like, as your gold holding is kind of like owning a picture of a gun for self-defense, in a panic, in a real panic, which of course can never happen again, you think people maybe might not be able to get all their gold, or, even in the I know Sprott has that PHYS or whatever, the physical, where it's supposed to all be there and allocated, but, who knows? So yeah, there could be any shift into gold. You're right, they're dirt cheap, but there's a lot of things that are dirt cheap and have been dirt cheap forever. And like I said, it looks like GDX has been dirt cheap relative to the SPX for years now, or relative to gold. So at some point, yeah, go ahead.
One of the reasons why gold, why there's this big divergence is because the majority of purchasing of gold has been by central banks, and they buy gold bars. They don't buy gold equities.
Sure. So, exactly.
Yeah. So
what percentage of Americans own gold? Like it's got, like you said, 0.5%. I mean, maybe one guy out of 20.
Right. It's under 0.5%.
Yeah. I love the Mark Dice videos where he'll have like an ounce of gold, or he'll have a 10-ounce bar of silver, and he'll be standing outside going, would you like this 10-ounce bar of silver or this chocolate bar? And everybody takes the chocolate bar. They have no clue. Would you like an ounce of gold, or would you like, $100? And they, every time. Americans are clueless on gold. They're clueless by and large. I think
you brought up Rick Rule earlier, and he talked about how the current, ownership in the Western G7 is something under 0.5%. But the historical 5-decade mean is somewhere between 2 and 3%.
Sure.
And so he thinks that there's going to be a mean reversion. He's not expecting some massive spike like after the GFC, where it went up to 7 or 8% ownership. He's just thinking it'll revert back to the mean 2 to 3% from the under 0.5%. And if it does that, that's a massive rotation into gold and gold-related assets.
Sure. Sure. I traded gold and silver stocks over the years. I've talked about that before. It's like, but again, it's a trade. And, I was just looking like First Majestic was one that I traded in and out of over the years, and I don't own any now. But I mean, silver's had a huge move, and, I'm looking at it now. I hadn't been looking at it in a while. It's at $6.66, appropriately enough, right now. I mean, it should be at 20. You would think it would be at $20 or, a share, but it's at 6. So, there's something wrong. The gold, like as you're pointing out, the gold stocks are not, and silver stocks are not trading on fundamentals. But then that's most of the market is not trading on fundamentals. And frankly, the index funds are not trading on fundamentals. They're trading solely on flows. So that's situation we live in now. Do I like it? No, but I don't, I'm not short the SPX or something. I understand what's going on. Now, at some point, maybe it is wise to short the SPX, but not for me.
It begs the question, though, with the money flows not coming into the miners. In a recent Ernst & Young survey of mining companies, it was found that the top risk is the lack of capital that they have experienced. Exactly what you're talking about, right, with the flows. As with oil, though, starving miners of capital when their products are vital to civilization all but guarantees higher metals prices ahead.
Yeah.
So is this scenario exactly what you can see coming at some point?
Yeah, well, this is why I like the streamers. That's so I for a trade I'll buy the gold or silver stocks, but for an investment I like the streaming companies, and not just gold but other streaming companies. I like that model where they're benefiting from the price, that they don't have any really they're not hurt by higher wages or higher energy costs or by anything like that. So it's a more conservative way to play it. I think it's a good way to play it. It's been doing better than the miners. And then again, you run into something like a Franklin, Nevada situation where somebody confiscates one of your mines or something. I mean, that can happen. But yeah, so I agree. So that's why for me, I more the streaming companies, the royalty, the royalty companies. I think that's a great, and I like it for oil and gas. I like it for gold and other base metals too. There's some streamers out there. So, and I got onto that from the Horizon Kinetics guys, who I think have a really good way of looking at inflation. Read some of their quarterly reports about inflation. You probably get a PhD level education on the real world. So I recommend that. Horizon Kinetics.
Appreciate that. And speaking of the base metals, did you see GM invested $650 million, and they're going to be partnering to mine here base metals in the United States?
Well, good. I hope they get the permits to do that. They see the writing on the wall. Yeah.
Well, this has been a wonderful conversation. Before we wrap up here, and I asked Rudy our final question, I want to point everyone over to our Substack. It's free. Go to metalsandminers.substack.com. We post free content on the consumer, economy, markets, artificial intelligence, individual metals and miners, and all the expert interviews that we conduct, just like this one. They're all up there. And when you subscribe, we want to give you a free gift. It's a report that we wrote. It's based on the important Ray Dalio foundational premise. It's titled, "If You Don't Own Gold, You Know Neither History Nor Economics." The free gift is a must-read for everyone on why we all should own gold. So head over to metalsandminers.substack.com, put in your email address to subscribe, and receive the free gift on us. Also, I'm positive that you've enjoyed the conversation with Rudy as much as I have. Please let him know by hitting the like and subscribe button and leaving a comment below the video. It's now time for our Golden Nugget segment. Rudy, let's discuss portfolio positioning based on all that's going on geopolitically, economically, socially, and more. Is the game essentially right now for investors to hang out in commodities that are starved of capital yet essential for humanity? And if so, what are some of those essential commodities starved of capital that should be on our radar?
Well, that's, like I was talking about, I do have an investment in the streamers through the Horizon Kinetics Fund. That its symbol is appropriately INFL, so full disclosure there. But I would say something that I've learned over the years is even though stocks may go up 25% every year for the next 10 years, supposedly, don't have a little cash. Always have a cash. You don't want to be forced to sell during panics. And I never that's one thing that saved me over the years. I never panic. And so, like, you'll see me sometimes if the Dow, when the Dow was down 12% in March 2020 or something, I'm just like looking, going, man, I got a grin on my face and I'm shaking my head. So it's a little bit of fear, but don't panic. And I know people who like sold at the bottom in '09 and never got back in. So whether it's in metal stocks or in minor stocks or whether it's in the SPX, don't panic out, because that's when you got to take the price of whatever it is. Other investments, I've got some conservative stuff that I hold, through thick and thin. If the stock market was down 50%, I would still own it. I basically have owned some of this stuff for 30 years. I write it out, and then I've got the stuff that I trade, which is, another half. And I may be out of it, later this afternoon. Sometimes I just go on hunches, but my advice is, besides being exposed to things that the Fed can't print, keep a little bit of cash. You never know. But not only for your water heater burst, but also, someday there's going to be a correction of more than, 2%. So you want to be able to buy and not be panicking and selling to everyone else selling at the bottom. And there might be quite an air gap, as I mentioned, with these index funds. So
fantastic advice, Rudy. Thank you for coming on to the Metals and Miners podcast and for being so generous with your time, analysis, and ideas. It's been awesome to spend the time with you. I've really enjoyed it. Would you please share with the viewers any important message you want to leave with those tuning in, where they can learn more about your work and how they can connect with you?
Sure. I have the Twitter is Rudy Havenstein. It's how it sounds. That's basically a mishmash of all sorts of eclectic fun things, music and jokes and serious news items. I mean, it's full of history, my account. You got everything's there on what the Federal Reserve and the banks and everything else how they've been screwing people. As far as more longer form, also very eclectic, but more financial news oriented, is rudy.substack.com. It's right now, it's mostly pay, subscription, $100 a year. But if you want, there's a ton of unpaywalled stuff in there where I write about, say, Weimar Germany, or about inflation, or a variety of other topics. So search some of the older posts for free, and you see if you like what you see.
Yeah, that's fantastic. I've been following you for quite some time, a couple of years, and love your work, love your information, love your perspective, your sense of humor. Guys, if you're not following Rudy, you really need to. I'll have all the information and links both on the screen and in the description for you to click through, take advantage, follow. Very important person to be following. I look forward to having you back on sometime soon, Rudy. Thank you for being here with us, and everybody else, thank you for watching.
Thank you.
I want to point everyone over to our Substack. It's free. Go to metalsandminers.substack.com. We post free content on the consumer, economy, markets, artificial intelligence, individual metals and miners, and all the expert interviews that we conduct, just like this one. They're all up there. And when you subscribe, we want to give you a free gift. It's a report that we wrote. It's based on the important Ray Dalio foundational premise. It's titled, "If You Don't Own Gold, You Know Neither History Nor Economics." The free gift is a must-read for everyone on why we all should own gold. So head over to metalsandminers.substack.com, put in your email address to subscribe, and receive the free gift on us.